Hello and welcome. It's the big deal of the week, which got concluded just when the government, the Reserve Bank of India, as well as the banks are all making concerted efforts towards the NPA resolutions. Now, Aditya Birla Group's Ultratech has bought cement units of JP Associates for about 16,100 crore rupees. It is the price they have paid for 21 million tons of cement capacity across the country, out of which 4 million ton is still under construction. Now, I caught up with Kumar Mangalam Birla on the deal and also various topics related to the group strategy and the impact of the GST rollout.
Absolutely. I think GST is a historic reform and can only do good for us as an economy. Any reform that results in simplification, I think, is very good for us.
That's true. And you had a large conglomerate, so many businesses in so many different sectors, Mr. Birla. So are each of your businesses now ready for a GST rollout? Of course, it will have some disruption and short-term pain.
That's true. I think all the businesses have spent a lot of time and effort understanding GST and its implication and, the rollout nitty-gritty in the last 6 months. And I think all of them are extremely well prepared. Having said that, all of them, like every other company in the country, will have to learn on the fly. I think the first few months might be a little uncertain, but like I said, I believe that this is a reform that has taken a long time to come, but is in the interest of Indian industry and the economy.
That's true. Now, another big reform that we are talking about, Mr. Birla, is the NPA resolution at the behest of Reserve Bank of India. Government has also put in so much effort. Banks are really working hard towards it currently. And the big one, the transaction that you sealed today and has been completed is to buy out JP Cement's assets. It's a large transaction. 16,100 crore rupees of debt will go away from one debt-laden company, and you will get a large capacity of cement as well. What does this mean for Ultratech?
So Ultratech becomes a much larger player. The capacity of the company goes to about 93 million tons. It becomes the fourth largest player in the world, which means that really you are at the head table in the global cement industry. It means we have a market share of about 20%. Most importantly, it gives us access to markets which we didn't have access to earlier. So markets like coastal Andhra Pradesh, markets like East UP, for example, Satna, for example, we, despite being a national player, really didn't have a presence in these markets. All of these are high growth markets. There are other markets where we had a presence, but we needed much more strength. So, for example, Himachal Pradesh, Uttarakhand. So that really has been the driving factor behind this acquisition.
So it's a large footprint that you have created across India, but then branding and marketing, is JP brand going to continue? Because still you convert that into Ultratech, probably the benefits will not be as huge.
I think that's a good question. The understanding is that we will phase out the JP brand and bring in the Ultratech brand in the next 2 months. So we have 2 months to do that. I think these 2 months will be spent on upgrading the quality of cement being produced by these plants so that they become equivalent to that of Ultratech cement quality.
All right, so that 2-month target is a very aggressive target. Another important bit with this asset buyout is that the capacity utilization across the 17 million tons of operational units that you have bought, how much are they currently, and what is Ultratech going to do to improve that and turn around these companies which are debt-laden?
So a big focus for the next few months is going to be on asset upgradation, retrofitting. I think these are inherently good plants, but they have been starved of capital for the last few years. So getting them up to capacity, focusing on operating efficiencies, productivity norms, that's going to be the overarching theme for Ultratech with these assets to start with. I believe that they operate at about 40% capacity just now, and the plan is that by the end of 4 quarters from now, they would be at an operating capacity of about 60%.
60%. And some of the ones who are probably non-operational in some of the areas, they will be operational as well. That's part of your plan.
So I think some of the plants that are non-operational will take a little longer because they're still to be fully built.
Right.
But of all the existing plants, we have a fairly good idea of what it takes to make each plant world-class in terms of technology.
EBITDA per ton, if that indication can be given, what could be that for the JP Cement units?
So very low just now.
Yes.
But again, we have an ambitious target. The target is to achieve an EBITDA per ton of 600 rupees after 4 quarters. Just to put it in context, the EBITDA per ton for UltraTech today is about 1,000 rupees.
Yes.
So you've got quite a long journey to travel.
Yes, in terms of the financials as well, 16,100 crore rupees coming in as debt. The EBITDA for UltraTech is expected to be close to about 7,000 odd crore rupees in this particular financial year. So looking at that, are you comfortable with the debt EBITDA levels, or is there a fundraising on the equity side required?
So as you would know, a large part of this funding has come from debt.
Yes.
And despite that, so even after taking the debt for this transaction, our debt to EBITDA is at about 2.6, if I remember correctly, and our debt to equity is at about 0.2. And just to put it again in context, I think these reflect a balance sheet that's stronger than most of the global majors in the cement business. So UltraTech is financially very sound. I think it's got the benefit of strong cash flows, and very much an asset that it has been able to afford. I think the whole magic now lies in sweating the assets and getting a return from them as soon as we can.
Yes, to maximize the benefits from these units. But you mentioned that its debt equity, debt EBITDA is going to be 2.6. So that means the entire 16,100 crores is not going to be the debt on the books of UltraTech as part of the deal. Some part is going as cash to.
So about 3,000 crores has been financed out of internal accruals, and the balance, which is the chunk of it, is being financed through debt that we have raised at sub 8%. Okay. Which is perhaps most competitive in the country today.
All right. Now, talking about the overall cement sector, where you have been so focused, Mr. Birla, in the past you said that the growth in the expansion to maintain the market share that you have currently will be in line with the growth that is seen in the cement sector, which is considered around 7 to 8%. Now, this will require even more expansion. Despite this deal, you will need to expand more. So where could that expansion in capacity come from? Is that going to be more organic, inorganic? What are the options that you're looking at?
So no specific plans as of now, other than the fact that we are putting up a plant in Madhya Pradesh at a cost of about 3,000 crores for about 3.5 million tons. Other than that, I think the focus very much is sharply on turning around the assets that we have acquired today and getting a return from them and bringing them up to speed with the technology that UltraTech enjoys, which is the best in the world today.
And Century Textiles merger, is that also on the cards on this front? Even that
Century Textiles management is completely different from that of UltraTech. So I don't think there's anything on the cards between the two companies. I'm not the right person to speak with any kind of authority, but from our end, I don't think there's anything on the anvil that I can talk about.
So talking about this particular deal, all regulatory approvals are in place, or we still have to go through a few?
So, you know, the most difficult part of this transaction has been the fact that it's had a plethora of regulatory approvals that we have had to go through, and which is why it's taken almost 15 months for us from the time of announcement of the transaction. But all of those have now been done, and we have the assets on our books now.
So after this particular experience, would you be looking at other opportunities also in the debt-laden companies, because you are present in so many sectors and so many assets are available now? So will Aditya Birla Group focus on taking more advantage of the opportunities that are available in the stressed asset space?
I don't think so. I don't think there are assets in the spaces that we are interested in or the spaces that we are in today. So no, that's not an opportunity for us.
So big plans there after this big acquisition by Kumar Mangalam Birla's company, and plan is to really rebrand JP Cement into Ultratech, which, remember, will be more remunerative. Further, Ultratech will also look to reach the 600 rupees EBITDA per ton for the units bought from JP, and also improve the capacity utilization from 40% to 60%. Now, Kumar Mangalam Birla also shared the vision on the financial services arm of the group as well, and he will talk about that on the other side of the break. Stay tuned.